Hey guys, how's it going? It's Andy from MagooInvesting. The stock market continues to fall, but I'm sure I am not the first person to tell you that. What we're doing now is we're looking for fantastic opportunities. I don't think we're at the point now where we're going to be buying back into growth stocks. We're going to watch how the market does. We're going to see how the interest rates change. But I'm talking about 3 stocks that I'm ready to buy right now. And there are 3 reasons why I'm looking to buy these stocks. The first one is that I consider them almost recession-proof. These are stocks that are going to do well pretty much no matter the market conditions. And the way that I prove that is these stocks have had to have outperformed the S&P 500 for the past 10 years, or in some cases longer than that, depending on how long it's been since they IPO'd. These are going to be stocks that I plan to own for a long time. So no swing trading, nothing that I see on an incredible discount. These stocks, for the most part, are down, but they're not as down as the overall market, and I see them as great opportunities. I'm starting to change my investing style going into 2022 because of the changing market conditions. I think it's really important to assess how the market looks, as in 2021 and 2020, growth stocks were the way to go. There was really no worry about how fundamentally sound are these companies. But now we're going into 2022 and things are very different. You're looking for companies that have stability. They are resilient to changing market conditions. And these are the 3 stocks that I picked that I'm going to be adding to my portfolio this week. I'm going to be doing a full breakdown of talking about the other stocks that I've added to my portfolio recently, but these are the 3 that I wanted to talk about. The first is going to be Realty Income Trust, which is ticker symbol O. This is the monthly dividend company for people that know. When you look at O, the thing that really jumps off the page is that not only has it paid out its dividend monthly with a dividend payout of 4.29%, which is solid, it's up 17% in the past year. And it's only down 3.2% in the past year. When you look at a company that you want to invest in as the stock market is going to be going sideways or down, I think this is a great example of what you're looking for. It is a company that mainly focuses in commercial leasing and real estate, and as a result, they have pretty long lease agreements. So even though the market conditions have changed pretty rapidly in the past couple weeks and past month, their leases are pretty set in stone, and when you look at their numbers, they have 11,000 commercial properties, a 98.8% portfolio occupancy, 60 different industries, and so they have a very nice spread. So even though things aren't looking great in the stock market, the realty business hasn't changed very much until things change with interest rates. But right now, things are looking very solid, and this is a great way that I'm going to be continually adding to my portfolio is with dividends. Dividends are a great way to bring in additional income. One of the problems that I have with investing is I buy into a stock, and then I forget to add on to my position. Buying into a dividend stock, it's going to pay you, in this case, monthly with a dividend. And with that dividend, I'm going to reinvest it back into those companies so that even if the stock market does go down, I'm going to continue to average in. And we're going to dollar cost average. I'm going to make a video talking about dollar cost averaging and why I think it's really important during times like this when the market is really choppy. But changing my portfolio to more dividend focus is going to allow me to continue to add without having to really remember when to buy. It's just the dividends are going to be automatically reinvested. And since we want to talk about how it's done, ticker symbol O, since 1995, it's returned 14.07% compared to 9.93% of the S&P 500. When we're picking individual stocks, it's very important that you are going to be outperforming the overall market. And having a track record since 1995, you've seen it during various market conditions. You have the dot-com bubble, you have the financial crisis. It has still outperformed the S&P 500 during that time with that 4.29% dividend paid out monthly. Big fan of that. Next, we're going to go to PepsiCo, ticker symbol PEP, which is returned 10.7% compared to the S&P 500 returns of 9.9%. PepsiCo is one of these stocks that is not very sexy. They're not going to be coming out with any new products that it's going to, have their portfolio and their revenue skyrocket. But when you look at their revenue, it has continually gone up over the past couple years, and it is very steady with the products that they put out. You see this as being a recession-proof stock because the products that they're putting out, their Pepsi products, their not General Mills, the Quaker Oats, the Frito-Lay's company, these are products that are going to continue to be bought with the same regularity that they have been in the past. The revenue looks fantastic. When you see their last earnings report, which was back in October, they topped their estimates despite higher supply chain costs, which is what you want to see. Supply chain is going to be the name of the game for the next couple months, as it's been that way for the past 6 months. Pepsi has shown that even with these problems, they're still able to outperform, and they raised their revenue forecast for the next year. Pepsi, in the past year, is up 20.8%, and that's what you want to see. You want to see a stock that is relatively stable. It has not done incredibly well in the past year, but 20% is fantastic, especially with the recent dip that the market has seen overall. When you look at the revenue sources, it is broken up into some pretty nice areas. You have North American beverages being a pretty large percentage of their overall revenue. Then you have the Frito-Lay's North America making up a decent part, and then it's broken up into a bunch of other parts. This allows the company to kind of hedge their bets, where if something goes poorly in one quarter, it's going to bounce back with something else in the company. And so their revenue history, their overall returns, and they have a dividend of 2.5%. Makes this a fantastic stock to buy, in my opinion, as the market falls overall. This is going to be a long-term hold, and I'm going to continue to reinvest the dividends, just like with every other stock on this list. And then my final stock that I wanted to talk about is something that I've owned for a long time, and I've been a very big advocate for, which is NextEra Energy, ticker symbol NEE, which came out with earnings yesterday, so you'll be seeing this on Wednesday. They came out with earnings on Tuesday. They had earnings, the stock fell mainly because there's going to be a large change with their CEO and CFO. I think they're in fine hands. I don't worry about that. I was able to buy the dip this morning. It does have a 2.1% dividend, which is smaller than the other two stocks on this list. But what it lacks in the dividend, it makes up for in performance with a 15.13% return on a compound annual growth rate basis compared to the S&P 500 during the same time of 9.93%. The reason why I consider this a recession-proof stock is that they own Florida Power and Light, which is the largest energy provider in the U.S., and this allows them to have stability when it comes to their revenue. I've talked about it in my renewable energy stock portfolio video because not only do they own FPL, they do have investments in solar, wind, water, so hydroelectric. They have plenty of ways to grow into the future, but they do have that backbone of FPL being a very nice revenue source for them. And it's going to allow them to transition from normal fossil fuels to being a more green energy provider, and they have the infrastructure to do that. So even as the stock falls recently, it's going to show up in the headlines as being a big drop and underperforming the overall market. When you see the reasons why, the main changes with the CEO and CFO, in addition to a day where the market is very red and people are aggressively selling, I don't put too much weight into that. I see the returns of 15.13% versus under 10% for the S&P 500. I see the dividend of 2.1%, and I see a company that is in a great spot to take advantage of the green energy stock movement. So those are my three stocks that I wanted to talk about right now. I'll make a video in the next couple weeks talking about more stocks I'm buying, but these are the three ones that I've kind of lasered in on as the stock market falls, because I do think each of them have reasons to believe that they're a recession-proof stock in their own different ways. You have Realty Income, ticker symbol O, because it's a real estate company. These long-term leases aren't going to change overnight with the changing market conditions. Plus, as a monthly dividend payout, it allows me to dollar cost average into a company that I believe in that has outperformed the S&P 500. Then with Pepsi, this is a consumer staple product for a reason. People aren't going to be changing their eating habits, even if we have a market crash. People are still going to buy their Pepsi products. People are still going to buy their Frito-Lay's products. It has outperformed the stock market 10.7% versus 9.9%. Then you have NextEra Energy, which will benefit from the renewable energy movement. Significantly outperformed the S&P 500, 15.13% compared to 9.93%. Lower dividend of 2.1%, but it allows you to have the long-term growth with stability of owning Florida Power and Light, while also having some of the exposure to the growth opportunities with renewable energy stocks. So those are the three stocks I wanted to talk about. Let me know what stock you guys would like me to discuss in future videos. If you made it this far, really appreciate it. Hit the like and subscribe button, and I will see you in the next video. Thanks for watching.